Well, China, of course, a key market for luxury goods. And recently, the IMF raised China's growth forecast. But China still faces mounting debt. And that's the subject of today's Quick Take. China's $27 trillion pile of public and private debt is a threat to the global economy. Or maybe it's just a manageable byproduct of the boom that created the world's second biggest economy. Either way, the build-up has been breathtaking, with borrowing quadrupling in 7 years by one estimate. Here's the situation. China's borrowing soared to about 264% of GDP in 2016, all the way up from 163% in 2008. That outpaced the surge in the US and in the UK before the financial crisis. The problem could be bigger still because of the frantic rate of new lending, which makes it hard to know how many loans are not being repaid. The picture is complicated by shadow banking practices as well, including banks' wealth management products, likened by some to Western lender exposure in the subprime crisis. And in May, Moody's cut its rating on China's debt for the first time since 1989. Here's the background. During the 2008 financial crisis, Beijing ordered local governments to build roads, bridges and other public works to keep the economy pumping and workers in jobs. It set off a borrowing binge that's invited comparisons with Japan's debt bubble of the 1980s. The build-up comes amid China's slowest economic growth in 25 years and a push away from debt-intensive heavy industries and exports. So here's the argument. Optimists say concerns about China's debt are way overblown. Companies and local governments can simply grow their way out of the problem. An expanding economy supports borrowers and creates inflation, which erodes the burden of debt repayments. China's high savings rate and its current account surplus help too. Pessimists, though, say the problem is not self-correcting. They expect policymakers to tackle non-performing loans and stave off defaults. There's a risk that China's debt could remain a drag on global growth for decades. You can read more about China and all of our quick takes at NI Quick on the Bloomberg.